Welcome to the Daily Update. This is Being Prepared Thursday, February 17th, where we'll look at the action in the markets today and then see how things look for Friday, February 18th. It was a pretty broad-based negative day, but at the same time, we're back down into the range that we've been in for the last few weeks. So we really haven't gone anywhere. It seems like we have 1 or 2 days that look more positive and we go up. Then a lot of the geopolitical stage is influencing the market right now. And if there are fears that come into the market, we end up going down. And that's pretty much what we saw on Thursday. It was a broad-based sell-off. It was more orderly. There wasn't a lot of panic. It's just selling just continued and continued. And there wasn't really any participants that were willing to come in and buy. So we're switched back now to negative, which should not be all that surprising. So what happened on Thursday? We did gap lower right at the open, and it was a pretty big gap. I'll show you that on the chart. We went down to almost S2, which is right around the 4404 level in the S&P. There was a very muted bounce after that. Prices bounced up a little bit, but there wasn't a lot of conviction. There wasn't a lot of volume. It's not so much that buying picked up. I think it was more that selling fell asleep for a little while. It slowed down. Then as we went into the close, we saw a real increase in selling, and we closed almost at the low, and we ended up being down 2.2% on the day. Yesterday, we had a small up day, and the day before, we had a pretty significant up day, and volume on those days was below average. That can be seen as a negative. Well, when we had more of a broad-based sell-off on Thursday, and volume was still below average, that can be seen as more of a positive. There's a lot of confusion right now, and it just depends on which way the wind is blowing, how the markets are going to feel about that. So what we're fixated on right now is that the technicals are negative, and I'll prove that out with all the charts that I'll go through. We still have some earnings left to deal with. Inflation is still there and very much a big part. Interest rates actually declined a bit on Thursday, but that didn't give any real strength to stocks. We're seeing this risk on, risk off thing that had been playing out. Well, as interest rates go down, you would think that would help put some buying power into stocks, but that just didn't happen. Now we saw them both decline in the same day. And then we have the geopolitical concerns, specifically the Russia-Ukraine situation. So what can we say? I've taken that positive backdrop, or that positive, not so much the backdrop, but the range that we potentially could break up out of. I've taken that off. I've just kind of put that on the back for right now. If we see some kind of a rebound, that may come back into play, but for right now, it's just So prices are now back down within that short-term range that we've been dealing with for pretty much the last 2 weeks or so. And as I said before, yields, which means interest rates, they fell, and stocks fell as well. Where we've been seeing more of an inverse relationship, well, it was more of a tandem relationship on Thursday. Then we have Russia, Ukraine, and depending on what news reports come out, depending on what people decide to focus on, is the situation getting better or is it getting worse? And then we have a lot of just craziness coming out of Canada right now. And I would say that the Russia-Ukraine situation has more of an impact on the markets, and potentially that's more of a short-term type of a thing, because it's changing every day. If Putin invades, okay, the market's going to react. If he doesn't, well, the market's going to react. That's more of a short-term type of thing. Where I see what's happening in Canada, that's more long-term, because we're seeing some really interesting things happening there that could flow down into the US and are already trying to flow into the US way of doing things. And that can impact the bigger picture. So the economic reports that came out on Thursday, they were weaker than expected. Now, the unemployment initial jobless claims, they were up, which means weak because more people were filing for first-time unemployment. And then the real estate report that came out, that was weaker than expected. We do have some more existing home sales that are coming out on Friday. The market continues to be overvalued. And then the trend condition, because we had a down day, because the ADX, it's picking up that negative trend. With that down day, even though the two lines you'll see are on top of each other, we are seeing a bit of a strengthening in that trend. Our short-term bias is negative, and now our momentum, which is usually a few days, that's now negative as well. So let's look at the day session sentiment. Again, we're not seeing an awful lot of extreme fear or greed right now, as far as that's concerned. Our VIX, because we had a down day, we saw the VIX increase on a closing basis, and we closed right at the top of the bar on the daily bar chart. The VIX of the VIX, it also declined where it had declined on Tuesday and Wednesday, but with Thursday's downward move, we're seeing fear coming back into the market on both of these measurements that we use. One thing that's released every Thursday is the American Association of Individual Investors, their sentiment. What do they think is going to happen in the future from here? And these are individual investors. That's us. And we tend to react to things rather than proact. So if the market's going down, they're negative. If the market's going up, they're positive. And we've been getting some extreme readings. Well, we dropped right below this line. The moving average is just about on the line, but we were at a minus 24 overall. And that could potentially be positive because you're seeing a whole lot of people that are not necessarily all that well informed. They're getting fearful, and they usually make major turning point decisions at just the wrong time. So if a whole lot of them are negative at once, we want to look at possibly being positive. The futures are up as I record this. We're up about 0.5%. Gold, which had kind of broken out a bit, it's falling back in overnight trading. But so that there are some things that are coming into play, but that doesn't necessarily mean just because we got this reading that it's going to shoot up directly from here. We had extreme readings recently as well that sometimes it will lead to a big market move and other times it won't. But this is a weekly chart. We have the S&P up above, and then their survey that comes out every week on Thursdays. As far as our sectors, tech just got hammered, down almost 3%. We had, what was this, 9 out of the 11 sectors ended up closing down on the day. Discretionary got hammered again. Communication services, which is now switched over into last place in our sector evaluation. Financials, the only things that were really up were utilities and staples, the things that people have to have, a very defensive sector. So here we're looking at energy way over on the left since the January high. Then way over on the right, we see staples down here. Is that right? No, I'm sorry. These colors are kind of strange. Discretionary is way over on the right. Then this kind of Chernobyl green that we have here, that's communication. And then real estate, this is kind of that sickly looking green. It's also down. It had been in last place. So we're kind of jockeying to see which sector is doing worse right now. But everybody's pretty confused, and it just goes with the wind these days. The BDI really didn't tell us anything. It actually declined a bit on Thursday. As far as our Fed watch, again, just to take you through the scenario that we're talking through here, This is what it was before the CPI was released last week. Almost a 95% chance of a 1/2 to 3/4 of a point increase in interest rates at the Fed's next meeting. Then we started to see this shift where now they're thinking, maybe we should look at this 1/4 to 1/2. That might be what's happening. Well, let's look at the chart right now. It's now in the lead. The 1/2 to, I'm sorry, the 1/4 to 0.5% interest rate increase. That's what the market is looking at as the 1/2 to 3/4 is decreasing in probability right now. And then the chart, it's just going all over like an EKG upside down and sideways, where it's just really changing right now. Then our technical alerts, most of them were negative, except for gold that crossed above 1900. But the NASDAQ, first it went below 14, then, or excuse me, 14.1, then 14, then 13.9. We had the S&P go below 4,400. Oh, then the NASDAQ went below 13.8. So a lot of these. Communication sets a 52-week low. We saw that in our sector charts. The financials has a bearish MACD crossover. That's kind of interesting. So yeah, it was across the board negativity on Thursday. Looking at our chart, here's the gap lower going into the open, and then we just continued selling. We went almost down to S2. That's this dotted line right here. This is the muted bounce I was talking about. Yeah, some buying came in. It may have been some short covering, and they have to buy to exit their positions, but there was really no conviction here, and volume was trailing off as that was happening. And then we kind of sat up here for a bit, and then things started to go lower. We finally broke below S2. We never made it down to S3. We were kind of halfway between S2 and S3, so I didn't put that on the chart. And then we closed at the low for the day right here. Could have been a little bit lower, but it was just a negative day overall. Looking at our bar chart, we do have potential support still underneath where we're at right now as we continue in this range that we've been battling with. The breakout potential, like I said, I'm just leaving that off to the side for right now. We need to see things really come back with some strong conviction and more than just 1 or 2 up days to have that come back into the picture. But Friday, we may see something. There's some other charts that suggest that Thursday was a little overdone. So we'll see how things play out on Friday. We're down 8.68%. We're still under that 10% level as I measure things. And right over here is where we're at right now. So yeah, we're battling around. We're down since the all-time highs. You've got the bears that are very happy and are convinced that we're going lower. You have the bulls just kind of going, things could get better, but we're not sure when that's really going to happen. Growth versus value. Growth saw a decline. Value saw an advance on Thursday. Looking at our indexes, where now we're starting to see more of a breakdown between growth and value when you relate these two indexes with each other. NASDAQ 100 down, but we've gone lower before, at least on this chart. And this is relative to the S&P 500. As far as our trend, you can see these lines are on top of each other. It's kind of going sideways, but it's turning up ever so slightly with the red line going up and the green line going down. That means that the trend is strengthening ever so slightly, but this is a momentum indicator, and you can see with it flatlining to going slightly down, there's really not a lot of momentum now. We have an up day, then a down day, an up day, down day. So it's more of a pogo stick action. Then this is what we're watching for right now. We finally crossed and gave our second signal with the mass index. We went above 27. Well, now we just dropped below 26.5. We're at 26.45. And so we'll have to see, is this going to signal some kind of a move? And right now, it could be down, it could be up. we might be getting ready to break down lower, or if we see an actual reversal, we might be getting ready to break higher. We don't really know that at this time. We just have to look at this and go, according to this indicator, something big is getting ready to happen. And then they didn't update this because the PMO that I have actually switched back negative. So this should be a down red arrow. And again, we're at that point where if we have an up day, it's a green arrow. If we have a down day, it's a red arrow. So you got a lot of these indicators that they're trying their best to calculate and tell us what's going on, but even they're getting confused. As far as our breadth, it was a strong down day based on price and volume. We're still above the moving average on price. We're below and falling based on volume. So right now, this is a more half empty type picture because we're declining. We're seeing volume trailing off, which it had been doing for quite a while. And it's just a matter of time, is price going to fall? Now, we could get 1 or 2 up days and we could go back more to the half full scenario with this chart. The advanced decline ratio, it's well below 0 and declining with the down day on Thursday. Also, the new highs, new lows, it's trending lower on both of our measurements here. The accumulation distribution, it's hanging in there. It's still above this red line, but it had a down day. If we have some follow through selling, this could drop below the red line again. Short term, our moving averages are moving down the 20 periods, and this had been acting as potential resistance. Well, we hit that moving average and bounced down from it. Moving average study, we are declining based on the 20, 50, and 200-day moving averages inside the S&P 500. Our spaghetti moving average chart, we broke down below the 200-day moving average. So that's quite negative, but we've done that before and been able to bounce back up. And more in recent history, that's also happened. We just have to see, are we getting ready to head lower now, or are we going to find some support and go back into this range for a while? MACD has now switched over negative. Short-term oscillator, which never picked up this little up move here. That's interesting because this is a shorter term measurement and it usually is more sensitive to what's happening, but it never turned up even after those couple of up days. So this is also negative. McClellan oscillator, it was just a little teeny tiny above 0 after Wednesday. Well, with the decline, it's now negative. Then our stochastic RSI, these are very sensitive. It's already giving us an oversold indication. And the same thing with the Williams percent R. We went down pretty far, pretty fast with these indicators. The force index, which had been improving a little bit, is now going back down. Then one thing to be aware of, this is just a 1-day rate of change based on where we've been. And this is why we might see at least an attempted bounce on Friday. We don't know if it's going to have any strength behind it or not. And this might explain why the futures are up in the after hours. We went down pretty far, pretty fast with our rate of change. We're not seeing that on any of the other rate of change charts that I follow, but this just means we moved quite a bit compared to how we had been moving lately. Intermediate term, we are below the 50 and the 50 moving averages are going lower. The 100 and these two moving averages are starting to come further apart right now. And we've got a lot to do if we're going to get back into a positive stance, according to this chart. The PMO, this is what I said, it crossed over negative and based on price and volume is also negative. Our PMO study, those that are rising is declining. Those that are giving buy signals is declining, and those that are even above 0 is also declining. We had some new sell signals with the BPI where this turns even more negative, and where you'll see it as a technical alert is if we cross below 50. Above 50 is considered positive, below 50 is negative. Well, we're above 50, but we're declining as we potentially head to 50. Moving average rainbow, we're still inside, and we're starting to see more pronounced movement with our shorter term moving averages. Stochastics also may suggest that we were a little overdone on Thursday. Short term, we're in oversold territory, but we're declining intermediate and long term. Summation index based on price and volume continue to decline. And the slope, which had been hanging in there, it's finally given up a little bit and starting to roll over. The MACD is negative. Our longer term oscillators have not turned yet. Our shorter term oscillators are now negative. And then this is kind of always interesting. Even with the down day, we saw the Chaikin money flow actually advance slightly. And then this is another thing that we could look at as a potential signal to be aware of is this praying bottom fisher indicator. And that's good at picking bottoms, as disgusting as that sounds. But this doesn't mean it'll happen right away. This crossed quite a while ago, and we still haven't really done much with that, but it continues to show that there could be some kind of a substantial bounce. But we're just not seeing that based on follow through price action. The vortex, the green line is now crossed below zero, and the red line advanced ever so slightly. So this is more negative now. And then the CCI, this is also giving an extreme negative reading. As far as our different trading systems, we're negative based on the Elder with a red bar. We continue to be negative on the SAR. Different charts, the Heiken Ashi, this is more of a bearish candle right now because it's dark. The Kegi chart, it drew a little bit more after Thursday and it's red, so that is also negative. Renko, it's just sitting there. It can't figure out what to calculate next. So the last thing that it came up with was this clear box, and it's done nothing since then. 3-line break is looking a bit more negative. Equivolume also with a down day. The 1-period EASA movement is declining, and our 14-period EASA movement has now dropped below zero and is declining. Nothing new in the point and figure chart. It drew in those 3 zeros a few days ago. It has nothing new to add to this at this time. Remember, this is a chart that's based on price action. It doesn't really take time into consideration. And since we're just bouncing around, it doesn't see anything new. Then our Fibonacci retracement, we've now dropped below the 38.2 retracement level. And then our longer term charts, the arithmetic scale, yeah, we could be weakening longer term, but we're still hanging in there a bit with price. Now, if we see follow through selling, then this is going to turn more negative, but it hasn't turned negative yet. Then our logarithmic scale also showing weakness. Special K continues to be negative on the 1-year look, and then going back longer, it is also more negative. As far as our broad market, here's the S&P. We're back down within this range. The mid caps, they're also back down at the upper end of this lower range. And it's like northeast, eastern, western, south. I mean, it's kind of hard to navigate through this. Or small caps are just kind of back into the same range that they've been battling with for the last few weeks. The FANG stocks, they got hit hard. They were down over 3%. We have a crossover, a death cross here, but they're still consolidating sideways overall. ARK got hammered again, down over almost 6.5% on Thursday. The Dow, it was looking like the 200-day moving average could be upward resistance. That's what happened. The pivot level was also resistance, and we fell down from there. Small caps, similar story. We dropped below the pivot, the moving averages are negative, and we're back within the range. Mid caps, down below the pivot, moving averages starting to come apart ever so slightly and back within the upper part of this range. NASDAQ down 2.88%, back into the range again. NASDAQ 100, also more negative and back within the range. The VIXN, because we had a down day, we saw an increase in fear, but it could go higher than this if there is follow through selling. NYSE, it had been holding up pretty good. Well, we dropped below the pivot on Thursday, and we're below the 200-day moving average as well. Then the S&P 100 versus the S&P 500, we're seeing weakness in the 100 biggest stocks in relation to the S&P 500. Wilshire also looking more negative and back within the range. China is kind of floating sideways, where the emerging markets, Europe, Japan, and even the US, according to this indicator, are still trying to turn back more positive. Looking at all stocks, we're now down. We continue to be down below the moving average, and this blue moving average, the 50, is in danger of crossing the 200, and that would be pretty negative. We have not seen that in quite a while. Broad markets, the dollar's hanging in there okay. It was up a bit on Thursday, and then in our weekly chart, we're right near the upward moving average. Oil, it really got hit. It was down over almost 4%, 3.87%. We're back down to about 90, and that didn't give any support to the market. Now, if you project this back a few years, back even before the Trump era, back in the Obama era, if oil was going up, the market was going up. There were a tandem relationship there. Where now, since oil's screaming up so much and inflation is such an issue, if oil is going down and interest rates are going down, that should have given some support to stocks, and it just didn't do that. So we're in that kind of a situation now where even positive news is either ignored or treated as negative news. Is that going to continue, or was that a one-day phenomenon? We don't want to get caught up in one-day-itis here. That's how it played out on Thursday. On Friday, it could play out in a different way. Gold, see, but we've been here before, but it is breaking out, and I'll have another chart later to show you of that. Silver also was up 0.78%, but we're kind of still more range bound with silver. The CRB was down a little bit on Thursday, but is still in a very solid uptrend overall. Then Bitcoin, it's getting now down into the low 40s. Last time I checked, it was at 40 something, where we had been mid upper early in the week. Now we're down in the lower 40s. Really not much is being decided here. If we get back down into the 34 range, and if we really get down below 30 into the 29s, that's where things are going to get really interesting for Bitcoin. As far as bonds, this is what we've been watching. We saw a little bit of a bounce back up with the 2-year as far as the credit spread is concerned. So we just want to keep an eye on this to see how it behaves. And then the 3-month curve is really not doing us any justice right now, but I still like to look at it every day because that might change at some point. And then I added another line on here with the 10-year yield, where we had broken above the Fibonacci retracement at the 50% level. Well, this, with the moves we've seen in the last couple of days, we broke through this resistance, and now what was resistance may possibly become support. So we want to keep an eye on that. Yields fell pretty much across the board on Thursday with the 30, 10, 5, and 2, and the 3-month also declined, but it did not give any support to stocks. Internationally, we saw some declines here, but they're all trending higher as far as their rates are concerned. Bond prices, even though they were up slightly on Thursday, still continue to be in a pretty severe downtrend. Then our corporate bonds, they bounced up a little bit, and the current yield is right around 3.35%. As far as our relative studies, this is the other gold chart that we've been watching. As the S&P declines and gold tries to do a bit of a breakout, we're seeing the relational study here showing this on the chart, and we just want to keep an eye on this. There have been a lot of fake outs with gold recently and over the last number of years in particular. Is this going to be another fake out? Are things going to settle down and gold's going to fall and the stock market's going to go back up? That's one possible scenario. Or we're getting ready for things to get really ugly and gold is seen as an inflation hedge and more of a safe haven. And so people are getting into that. So what do we look for on Friday? The markets are in that short term, and short term here is the last few weeks. That's the range that we're in. We're still dealing with earnings season. We're still battling between growth and value. On Friday, we have existing home sales. That could be a market mover because we're seeing some real weakness in real estate right now. And then we have the leading economic indicator, or LEI. That's pretty much ignored by the market because so many components are already known beforehand. It's not really living up to its name. It's supposed to tell us what's going to happen in the future. Well, it doesn't really serve the purpose. So the market tends to ignore that one. We're still dealing with Russia and Ukraine, and that could change. That could get better or worse pretty much in a moment's notice. We still have 1 or 2 days left of the Olympics, but I haven't really seen anything political coming out of it. The Iran meetings are still going on, but I haven't really heard much there. That might have been part of the decline that we're seeing in oil. And so, yeah, it's just really interesting right now. And then Canada, which is kind of going through some pretty crazy times. Our conclusion is we've switched back to negative. The S&P is now negative and is range bound. Short, intermediate term, we are negative. The long term, as long as we're holding up on those longer term charts, that remains positive, but could be showing signs of weakness. So have a very good Friday. I will prepare the next video after the market closes on Friday. That'll be posted over the weekend. So have a very nice weekend, and I'll talk to you next time.